Start with the check on the crude prices, which have dipped more than 0.5% following weak economic data from the U.S. The disappointing manufacturing data from the U.S. has revived demand concerns among investors, even as uncertain negotiations on the fiscal cliff issue keep investors on the edge. But supply worries stemming from the simmering tensions in the Middle East help cushion on the prices. On your screens, there it is, more than 0.25% or 0.5% of a decline coming in for the crude prices. Same has been the case with gold too. The prices have also dropped more than 0.5% here, reaching its lowest nearly in a month. The gold remains range bound, trading at around 1700 levels as investors expect another round of monetary easing following weak economic data in the US. The US Fed is expected to meet on December 13th, and markets are hoping that you might see a fourth round of quantitative easing coming in, and that's the reason you have seen the gold prices hold above that 1700 mark, 0.5% of a decline coming in even then in the international markets. Let's get in then. Sugandha Sachdev, she's in charge metals, energy and currency research at Religare Commodities. Also joining us is Vijay Bhamwani, who's author and CEO BSPLindia.com. Sugandha, hi, welcome. Let's start with you first. And the kind of declines that we have seen in case of the gold prices, 1700 just about holding there. What's your sense now coming in for the next few sessions?
I believe market has seen a lot of correction last week, but then this correction is likely to continue in coming days as well. I mean, the major support for gold prices is pegged at 1670 an ounce in international markets. So I think there would be some more supply pressure here at these levels. And in case market breaches this level of 31,480, we can see a significant slide towards the level of around 31,200 to 31,100 as well in coming sessions. For an intraday perspective also, I would like to advise traders to go for sell positions at levels of around 31,660 to 680 on the higher side, and they can keep a stop loss of 31,780 on the higher side, which is acting as a very strong hurdle as of now, and they can look for targets of around 31,480, and once that's breached, yes, they can also target levels of around 31,200 on the downside.
Sugandha, would you also have a sell strategy coming in for silver, because we've seen declines come for that one as well? Previous week wasn't so good, and this week also we haven't seen $34 breach yet again for the commodity.
See, the overall long-term interest remains intact in bullions, I would say that. But then for an intraday perspective or a very short-term perspective, silver is actually facing a very strong resistance at 33.8 levels in COMEX, so which is actually leading to a lot of selling pressure in the market. And on the downside in MCX also, I think there is a very major support at 62,800 to 62,700 levels. So market participants can definitely, on a rise, they can look for selling, and they can look for targets of around 62,800 to 700 on the downside.
Vijay, what's your sense coming in for the precious metals now? Of course, the data has been on the weaker side from US, but there also is an expectation of a fourth round of quantitative easing. Ahead of that, the jitteriness, all of that, how would you expect the space to behave?
Manisha, I maintain my view. I stated yesterday that bullion is likely to head lower, because of the simple reason that there is a reduction or a compression in safe haven buying support coming in the absolute near term. There is a clear negative divergence on the charts between the price and the oscillators, and I maintain my view that 31,400 in the February futures of gold, because the December futures are nearing expiry here. So the February futures below 31,400 will see a distinct weakness in the undertone. As far as silver is concerned, the March futures trading below 63,800 also are showing signs of weakness. So in the future segment, I would not recommend buying or bottom fishing for bullion. Buying for delivery for medium to long-term investors is a different ball game altogether. And as a matter of fact, I think buying on dips in the physical segment actually makes more sense, because either which way the negotiations for fiscal cliff go out, printing currency and debasing fiat currencies, thereby inflating hard assets, seems to be the only logical outcome.
All right, so buy physical but sell in futures is a strategy coming in from our experts here. Let's take a look at the crude prices, where we have seen sharp declines coming in as well. Sugandha, what's your sense coming in for that one? Because if you look at the crude prices, the NYMEX, of course, hasn't been able to breach that 88-89 mark for the last couple of sessions, even as it tries.
Actually, market is facing some lethargy at levels of around 4950 in MCX and at levels of around 89.2 in NYMEX. Every time market is trying to cross that level, it's faced with selling pressure. And moreover, with the recent, if you see the US manufacturing data, that is quite weak. But yes, there is some support coming in from Middle East tensions and the Chinese economy, which is showing some signs of recovery. But then for an intraday perspective or for maybe 2-3 days perspective, I think one can go in for selling, keeping a strict stop loss above 4950, and one can look for targets of around 4770 on the downside.
Vijay, what's your sense for this sector? Of course, we've been talking about natural gas prices where there is stiff resistance coming in at around 195-200 kind of levels. Do you see an upsurge coming there soon?
Not in the absolute near term, Manisha. I think there is an overhang of overhead supply coming in, and unless the 204 level is taken out absolutely forcefully with a humongous rise in traded volumes and at least a 30-40% addition in open interest, I would say natural gas is also facing overhead supply. I would want to watch the 192 or maybe 191 levels for a correlation between price, open interest and traded volumes to take a fresh view. And only there, if I see signs of proactive buying coming in from the bulls, would I venture out some amount of fresh positions, barring which I would sit on the fence and wait it out.
Vijay, how would you look at the base metal space? Because last week was a good one. We saw good gains coming in. And also, how would you look at these numbers? Because if you look at aluminum, zinc, nickel, all of these metals gained around 9% for the month of November, while copper only managed a meager 3%. How would you look at December now?
I think there is optimism in the undertone, but in the absolute near term, I'm talking of 2 or 3 trading sessions at best. Many of these industrial metals have run up far too much and far too rapidly, so they are appearing a little stretched on the absolute near-term charts. Yesterday we talked about nickel as a short. I think that trade worked out beautifully well, and if I see nickel appearing at 969, 968 odd levels, I don't really mind venturing out fresh shorts there. I would hold that with a stop loss again at 975 odd levels, expecting to book profits all over again at 955 levels. Zinc December futures, I don't mind shorting at 110.75 with a stop loss at 111.5. My target for booking profits will be close to 109 quarter, 109.5. I think copper is appearing a little sluggish at this point in time. It has to cross over the 448 levels before momentum players can come out and buy again. So wait for a breakout above 448 on very high volumes with a sizable increase in open interest before you venture out another buy out there.
So Gandha, what's your opinion for copper really? Because 444, 445 just about holding. How would you want to trade it for the session today?
See, actually there is some optimism in the market, as Vijay also said, just because of the positive manufacturing numbers from China in over an year's time. And also, but then the euro has also strengthened after Greece and Spain has shown some efforts to resolve the debt crisis. But then there are concerns about the US economy where the numbers are coming out to be slightly discouraging. So I think market participants should wait for the timing, but yes, they can, for the further buying positions, but some divergence is appearing on charts, so one can go in for selling in all base metal pack. In copper, I can see some strong resistance emerging at levels of around 446 to 447, and in LME also 8020 per ton is acting as a very strong resistance. So one can sell at current levels, keeping a stop loss above 448 and looking for targets of around 440.5 and then eventually 435 as well in coming days. In nickel also, market is not able to cross 960 mark on a closing basis, so one can sell. So the selling position would be more confirmed in case it is able to break 950 mark on the downside, below which I think the downside would be up to 930 as well. In lead also, if I see the pattern, 123 is acting as a very strong hurdle and market is not able to close that level, close above that level. So one can look for selling in lead prices as well, keeping a strict stop loss above 123 on a closing basis and targeting first levels of around 120.8 and then eventually 119 as well in coming days.
All right, so short sells coming in for the base metal space, not a buying opportunity, at least in the markets today.